Jahangir, really good having you. Thanks so much for taking the time out. Uh, you know, a lot of people would believe that it could be September. A lot of people believe it would well be December as well. That opinion is still divided. But now, would you reckon that there are more chances of a rate hike from the Fed coming in this calendar? And two, what are the implications, if any? Because a lot of people again say that the first rate hike is now anyways discounted by the markets.
Well, a couple of things. One is that we actually do continue to believe that the first rate hike most likely will be in September, unless between now and then there is a major increase in dollar strength. That's probably the only thing that could hold back the Fed from raising rates in September. We also believe that there will be two rate hikes in 2015. So answer to your first question, we definitely think that the liftoff takes place in 2015. My sense is that the timing of the rate hike, that was a Freudian slip, between September and December, I don't think that matters as much as probably where the market sees the pace of Fed normalization versus where the Fed sees the pace of Fed normalization versus where we see the pace of Fed normalization. So I think that there is a distinct difference in the pace of these normalizations parts that people have in mind, and at some point in time they will need to get aligned. That is, I think, the real big puzzle as to when it happens, in what direction it happens.
Whenever it happens, Jahangir, is it something that the market is already priced in? It's been a wobbly ride of late this last 1 month. Does it seem like it's already in the price? Could we see the markets correct? If indeed the quantum is a little higher than what the markets have been pricing in for now?
My guess is that, look, this is the biggest shift in global financial conditions that we will see in the last 5, 6, 7 years. This is a serious regime shift that is going to take place. To what extent is the market pricing in a September or a December hike? I would say the market still is not fully on board with the 50 basis points of rate hike within this year. They're probably looking at even 25, and that too probably closer towards December. As I said, I think the real challenge is not whether it's in September or in December. If it doesn't happen in September, markets will probably rally a bit, but then immediately they will say, well, definitely it's in December. So I don't think you're going to get a massive amount of relief rally if it doesn't happen in September. My point, if it doesn't happen in December, then of course you will probably see a lot of relief rally taking place. But in our view, I think the real question is the pace at which the swap curves are pricing in the terminal rate and the time at which, where the terminal rate will hit versus where the Fed is looking at it, at least going by the dots, and what I would say, reasonably, economics would suggest where the pace of rate normalization should be.
Jahangir, let's move back home and talk about what's happening here. And I would reckon that most people will now start believing that we are one step closer to GST. We may not have hit the home run as yet, but would you believe the same? We are one step closer?
It's difficult to say how parliamentary sessions go, right? But I think there's a lot of talk of compromising, a lot of talk of people talking about, giving up this, giving up that. My guess is that we probably need to wait and see what the Arvind Subramanian working group comes up with. There are legitimate questions that the CEA had raised, particularly about the 1% state tax, which doesn't really bode well for the efficiency gains one had expected from the GST. We're not talking about the gains from revenue. That's a separate issue altogether. But sheer efficiency gains by having a standardized single tax rate, if you still have a 1% tax that the states can impose, then those efficiency gains are more or less all gone. So I think we need to wait and see what the form has to be. I'm much more hopeful, perhaps, that the amendment will go through, the constitutional amendment will go through. I'm probably less hopeful that we will have a compromised, reasonably good GST that we can all live with, an agreement over that in this year.
Rate is 25. Would that be a big surprise to you?
I think the GST rate needs to be somewhere in the 15-20 range. It needs to be probably closer to 15, but then that requires that a whole bunch of things that had been pushed out of the GST ambit needs to be put back into GST. And I think the success of a GST, both in terms of revenue and in terms of efficiency gains, depends almost entirely on how broad-based and how few items are left out of the GST net. So I think that's where I think there is. I'm not denying that the rate by itself is a problem if it's too high a rate, but also the things that are part of the GST net and the ones that are being left out as part of the compromise.
Jahangir, I want to talk about the big puzzle, and that's China, because there are some experts saying that the next world recession, whenever it were to kickstart, it's going to be led by China. There are others who are saying that the economy is not all that bad, as the stock market seems to be implying. What is your stance on where exactly does China lie right now?
Look, we have enough amount of China bears in the market, and they have all calls for a China meltdown has so far been premature. If you look at the economy is doing reasonably well under the global conditions. I think what people are completely forgetting, even when they discuss India, is that global growth is not only significantly lower than it used to be in the past, but also the nature of global growth and where the global growth is coming from, that itself has changed very, very sharply over the last 3-4 years. In particular, you can see that in the big driver of EM Asia growth, exports, which is doing almost nothing compared to what it used to do in the past. Within that ambit, if you look at where the Chinese authorities want China's growth to be, they want growth to be lower on a much more, on a steady decline. Every year in the last 3 years, they have brought down their target growth rate. And my guess is that in the next 2-3 years, you will see a continued secular decline in China's growth rate. I think that's not the surprising part of it. I think what is a surprising part of it, and this is where market perceptions of China's growth versus the reality of China's growth becomes problematic, is that China's growth at the same time is becoming much lighter. If you look at the last 10 years, China has continuously implemented policies that has made China's growth less resource intensive. Manufacturing is not the biggest driver of China's growth today. Services are the biggest driver of growth today. Real estate investment isn't the biggest driver of fixed asset investment. It is manufacturing and infrastructure. And all of them are much lighter. And this reduction in resource intensity means that when China's growth slows or picks up, the impact on global demand for commodity isn't that much. And we look at global commodity based on the historical weight of China in global commodities, and we say, China is probably running a growth rate much lower than what the official statistics, etc., says. And our sense is that's not the case. It is just that people are not taking into account the seriously large structural changes that has taken place in the composition of Chinese growth.
Point well noted. Jahangir, it's always a pleasure having you more so today. Thank you so much for being with us and giving us your broad brush assessment on the Fed decision and more importantly to my mind the GST as well. Thanks for joining in today.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.